Hey, it's Kerry Blumenfeld, Method Real Estate Advisors, and today I wanted to talk about closing costs. We're going to get those questions. What are closing costs? How much are they going to be? How do you determine what they are? Some people don't even understand that they need closing costs on top of their down payment, or they need their down payment on top of paying closing costs. So what we're going to do real quick is just kind of take a look at a settlement statement. This settlement statement is provided at closing, and it takes both the seller's transaction and the buyer's transaction and breaks them down. So what I want to show you is what these closing costs are made up of. Make sure you speak to your buyer and you let them know that when they're speaking to the lender or their loan officer, asking about closing costs, tell them to ask what all of their closing costs will be, essentially their cash to close. If they only say, "What are my closing costs?" the lender or loan officer typically is just going to disclose their fees, their origination fee, underwriting fee, um, you know, taxes, and insurance. Usually, that's what they're going to talk about. Make sure that they ask about all of it. That's the loan charges, the impounds, which are essentially fees collected or amounts of money that are collected from the buyer at closing, and those are used to fund their escrow account. That's for insurance, that's for property taxes, and any other adjustments that are needed based on tax bills and things like that. So it's extremely important for your buyer to understand that lender closing costs are very different than total closing costs. Let's take a look at the settlement statement. We can see that the purchase price right here, $344,900, this is the buyer side, this is the seller side. So here's the sales price. Here's the earnest money, their deposit. Loan amount, $293,165. And then they got a seller credit, which is either for seller paid closing costs, some kind of credit in there. Now, we're going to have prorations and adjustments, meaning these are taxes. The tax bill has been paid. So the buyer is going to give the seller a credit. The attorneys handle all of that. They break that down and make sure that everything is prorated properly. Here, this is really the meat of it, is your loan charges. Here is 0.943% of the loan amount. It's a point. So right there, that's part of closing costs. Broker compensation. So this is the loan officer's compensation. There's an underwriting fee. There's an appraisal fee, flood determination fee. There's tax service for the life of the loan. Here's prepaid interest. These are larger amounts. And then here come your impounds. Homeowners insurance, so $242 a month. They're going to collect $726. That's for 3 months. Property taxes, they're going to collect for 2 months. And then there's an aggregate adjustment right here. So they're getting a credit back. Other charges, they're recording fees. There are intangible taxes that the buyer pays. There are transfer taxes that the buyer pays as well. Commissions, of course, are on the seller side. And then we have the title fees. Really, the meat of it is the lender's title policy. Here's the attorney fee, almost $600. And then the owner's title policy. So that's a good amount. And then also they're going to pay a year's premium to the insurance. And that's $2,907. So that is collected up front. And then here is your total amount due from buyer, $62,837.91. This is their down payment minus the earnest money plus all of their closing costs. So down payment plus closing costs minus the earnest money delivered. So what you see is everything is lined out, basically put into line items. And this is a great way to help your client understand what those closing costs can be or are going to be. You can reach out to the attorney and ask them for a preliminary closing statement. Now, they may not know all of these loan charges, so you can get those from the lender, but they should know the insurance, taxes, all of these other items. They can pretty much state exactly what they're going to be or very close. So speaking of closing costs, make sure that you're not only talking about the lender's closing costs, you're talking about all of them, your cash to close. It's extremely important.